Bismillahirrahmanirrahim. Al-Fatihah. Bismillahirrahmanirrahim. Alhamdulillahirabbil alamin. Hamdan hamidin, hamdan syakirin. Hamdan yuafi ni'amahu wa yukafi mazida. Ya Rabbana lakal hamdu kama yanbaghi li jalali wajhikal karim wa azimi sultanik. Wassalatu wassalamu ala asyrafil anbiya'i wal mursalin Sayyidina Muhammadin wa ala alihi wa sahbihi ajma'in. Allahumma nawwir qulubana binuri hidayatik kama nawwartal arda binuri syamsik abadan abada birahmatika ya arhamar rahimin. Rabbana shrah lana sudurana wa yassir lana umurana wahlul 'uqdatam min alsinatina yafqahu aqwalana. Fafahamna Sulaiman wa kullan atayna hukman wa ilma wa sakharna ma'a Dawud al-jibali yusabbihna wat-tayr wa kunna fa'ilin. Allahumma ij'al jam'ana hadha jam'an marhuma wa tafarruqna min ba'dihi tafarruqan ma'suma wa la taj'al Allahumma fina wa la ma'na wa la man yatba'una shaqiyyan wa la matruda wa la mahruma. Allahumma ighfir lana dhunubana wa li ikhwanina alladhina sabaquna bil iman wa la taj'al fi qulubina ghillan lil ladzina amanu rabbana innaka ra'ufur rahim. Rabbana 'alaika tawakkalna wa ilaika anabna wa ilaikal masir. Rabbana atina fid dunya hasanah wa fil akhirati hasanah wa qina 'adzaban nar. Wa sallallahu ala sayyidina Muhammad wa ala alihi wa sahbihi ajma'in. Walhamdulillahi rabbil alamin.
Thank you, Muhammad Akmal Arif bin Muhammad Zulkifli, for reciting the dua just now. May our event be blessed and run accordingly, insyaAllah. Without further ado, I would like to invite Dr. Muhammad Shahid bin Muhammad Noh, who will be the moderator for our event today. Dr. Shahid, the floor is yours.
أعوذ بالله من الشيطان الرجيم. بسم الله الرحمن الرحيم. الحمد لله رب العالمين والصلاة والسلام على أشرف الأنبياء والمرسلين وعلى آله وأصحابه أجمعين. سبحانك لا علم لنا إلا ما علمتنا إنك أنت العليم الحكيم ولا حول ولا قوة إلا بالله العلي العظيم. السلام عليكم ورحمة الله وبركاته. Thank you, Mr. Shahmi. Honorable Professor Dr. Asma binti Abdul Rahman, distinguished guests, lecturers, participants, and students. First of all, I would like to welcome all guests to this presentation. In this occasion, we would like to have a presentation from Dr. Asma binti Abdul Rahman, inshallah. Before the lecture begins, allow us to introduce the presenter. Dr. Asma binti Abdul Rahman is a professor at Academy of Islamic Studies, University of Malaya. Graduated from bachelor to PhD level from this university, specialized in Sharia economics. She had involved in numerous of research at local and international level, publication index and high-class journals, and also appointed as Sharia committee or advisor by several financial institutions in Malaysia. Today, we are very lucky to have Dr. Asma with us, and we hope we could gain a fruitful session with Dr. Asma, inshallah. Ladies and gentlemen, the lecture will take about 1 hour and 20 minutes, will be followed by a Q&A session. If there is any question, I hope it will be asked at the end of the lecture. Without further ado, I would like to welcome Dr. Asma to give the lecture. وتفضل مشكورة.
Assalamualaikum warahmatullahi ta'ala wabarakatuh.
Assalamualaikum.
Thank you yang berbahagia Dr. Muhammad Shahid Muhammad Noh, all distinguished guests and all the respected participants today. So my lecture will be on the development of family Thaqafi products in Malaysia. So let me share my slide first. Is it okay? Bismillahirrahmanirrahim. Okay, so the development of family takaful products in Malaysia. So basically what I will be talking about is the development of family takaful products in Malaysia, which is basically the development may become of because of the regulatory framework in place, or because of the direction from the regulator, and also from the Sharia and from the Sharia um, um, ruling, or also from the market driven. Okay, but before I go further on this, I will look on this, which is a basic knowledge when we talk about takaful. Okay, so basically when we talk about takaful, we are talking about risk. Okay, so in our daily life, we are exposed to risk that sometimes we may aware or we may not aware. Okay, so for example, if we are walking on the road, or if we are driving a car, or even if we are flying on the flight, okay, there are certain risks that may occur to us. For example, the car may hit us, or if we are climbing even the stairs, maybe we fell down from the stairs. Okay, so this is among the risks that we may face. And other than that is a premature death, or we die before which is expected. I mean, this is of course qada and qada from Allah, but basically, for example, a person is expected to live a long life, okay, but because of the disease, or because of an accident, okay, he or she may die early. Okay, so because of this, we can see that one of the way of mitigating risk is by taking takaful, or by taking insurance, but insurance is prohibited. And from this perspective, okay, do we have to mitigate this risk? Okay, so for example, if we die early, okay, so for example, me, myself, I have children. If I die early, what will happen to my children in terms of their financial need? So I have to take a precaution, okay, to ensure that if I die early, there are certain financial assistance being left for them. Okay, one way of doing this is by taking takaful as one of the instrument. Even though we see that people will say that yes, we will die, this is for that and for that. Yes, okay, this is for the and for that, but to ensure that our family that is left behind still have a, a good financial assistance when we are not here anymore. Okay, and looking at this from Islamic point of view, to mitigate the risk is something that is encouraged. Okay, and this, when we look at the Prophet Sallallahu Alaihi Wasallam has a conversation with one of Bedouin who has left his camel and then without tying the camel. Okay, and then the Prophet Sallallahu Alaihi Wasallam asked him, okay, why don't you tie down your camel? And the Bedouin answered, I put my trust in Allah. So this is what we say, that when we believe in Allah, we believe that Allah will help us, but it does not hinder us from mitigate the risk. So this is what has been taught to us by Prophet Sallallahu Alaihi Wasallam. So Prophet Sallallahu Alaihi Wasallam said to the Bedouin, tie your camel first, then put your trust in Allah. So in this matter, if we are talking about the risk that we may face, okay, which is, for example, like I mentioned earlier, we may die early, or for example, if we've been diagnosed with critical illnesses and we need huge money to do operation or to do medical treatment, and if we don't have a saving, so by taking takaful is one of a way to mitigate the risk of when we need financial assistance in the future. And okay, and so in the past, when takaful has not been introduced yet, and insurance was in the market, So many Muslims are not keen to take insurance because of insurance being seen as a financial instrument which are not in line with Sharia. And in that sense, we can see that the role of insurance in providing financial assistance is something that is good, something that is noble, something that is accepted when insurance is provide financial assistance when any risk occurs. But because of the way insurance being offered, because of the way that insurance being the contract that being used in the insurance then make insurance is prohibited because of the insurance is based on the purchase contract, and also there are elements that are not in line with Sharia. So that's why it was prohibited, and most of the Muslim back then, which when they have a choice, they would not take insurance, okay, and which put them in a situation that he or they does not have any financial instrument to mitigate the risk. Okay, so back then we have many Muslims who see on this matter and try to overcome these issues by introducing takaful as one of the alternatives. But if we look at the element or the prohibited element in insurance, okay, which make insurance prohibited, then how the Muslim scholars and also the practitioners want to provide or want to derive a new Islamic insurance or insurance that in line with Sharia, they have to analyze what are the elements which are prohibited and what would be suitable contract that can overcome all these prohibited elements. Okay, so among the most three significant prohibited elements in the insurance is riba, wara, and maisir. So this element of riba, for example, which exists either riba qar or riba al-buyu. Okay, so riba al-qar exists because of in insurance. Okay, for example, when we have an insurance policy, for example, we are allowed to take a loan from our own policy, but we will be charged certain interest, okay, when we take a loan from our own policy. So this is one of the riba in the insurance. Other than that is riba al-buyu, okay, which is exists because of the contract of insurance itself. Okay, because insurance is based on purchase. Okay, when we take insurance, then the contract with the insurance company would be I or we hereby purchase the insurance contract. So because of this, okay, we have to, in Islamic law of transaction, okay, when we use the contract of purchase or buy, there are certain conditions that we have to meet. Okay, so for example, since when we buy insurance, we are not buying the contract itself, we are not buying the document of the contract itself, we are not buying the protection because we are not because protection is not a goods that can be sold under the Islamic law of transaction. When we buy insurance, what we get from what we bought is actually the financial assistance or the money or the compensation. And this compensation will be given to us maybe after 1 year or after 2 years or after 3 years, okay, when the incident happened. So because of the delay of we get what we bought, okay, this is then will become riba al-buyu because we delay, okay, in the acceptance of what we are buying, because what we are buying is not the protection, but actually the substance that we are buying is money. Okay, so meaning we buy money with money. So that's why when we transact money with money, it should be done on the spot. Okay, we cannot delay when we buy money with money. So this is among the element of riba that exists in the insurance. So that's why when the Muslim scholars and the practitioners when they want to come with alternative for the Muslims to have financial instrument in the name of which has similar function of insurance, they have to come with another possible contract that should overcome this prohibited element contract. Okay, and now another one is gharar. Okay, the uncertainty. So there are few aspects of uncertainty in insurance. Okay, for example, when we buy insurance, we uncertain. Okay, how much we will pay the premium, especially if we are taking life insurance. So for example, if we take insurance for example, for 20 years, okay, yes, we know every month, for example, we have to pay premium for like, for example, 200 ringgit, okay? And with the policy that is coverage for example, 100,000 ringgit, okay? But since we are purchasing life insurance and what we bought will be given to us 100,000 ringgit, but we are not sure when we will get this 100,000 ringgit. It depends on when we will die. Okay. Other than that, so that's why we are not sure how much premium we have to pay. Is it for 1 year, 2 years, 3 years? We are not sure. So this is the element of gharar, and it cannot be accepted under the Islamic law of transaction because the contract is purchased. Okay. Other than that is gharar on not only the premium that we have to pay, but also the amount that we will receive. Okay, so like I mentioned earlier, if we buy the policy with the coverage of 100,000 ringgit, when will we get this 100,000 ringgit when we are paying the premium? Because it depends on when we will die. And let's say after the end of the policy, okay, when the policy is matured, okay, the tenure is ended, we still alive after 20 years, do we will get that 100,000 ringgit? No. Okay, we will not get 100,000 ringgit. So this is the element of uncertainty in insurance. Okay, so that's why it is cannot be accepted under Islamic law of transaction or under the Sharia. Other than this, the element of maisir. So the element of maisir, which is the gambling element, which is maybe when we take insurance, we get the reward higher than what we are paying, or the insurance company will get benefit or we get profit from the premium that we are paying. Because if we die, then we will get the compensation. But if we still alive, we will not get 100,000 ringgit that we are buying. So this is among the element of maisir or gambling that exists in the insurance. So in short, this element is among the significant prohibited element which resulted with insurance are prohibited. So that's why, for example, there was a research by Ernst & Young, 10 years back, when they did a survey. So they found that in certain countries, okay, the Muslim really don't want to participate even in takaful, because back then the awareness and the understanding of takaful is similar with insurance, because of they understand this is the prohibited elements in insurance. Okay, and I'll discuss after this when we come to the Sharia contract in takaful how this element of riba, gharar and maisir are not exist or are limited when takaful using other Islamic contract or the Islamic or the Sharia contract. Okay, and then so in terms of what is takaful, which is the alternative for insurance or Islamic insurance, okay, which is the agreement between a person who are exposed to risk to protect themselves against harms arising from the risk by paying contribution on the basis of commitment to donate or iltizam bitabarruk. Okay, And in takaful scheme, a group of people or the participants, we call the participant who are participating in this fund, okay, mutually contribute to a common fund with the purpose of providing mutual indemnity in the case of peril and harm occurring to any one of them. So the usage of the contract of iltizam bitabarra and tabarra, okay, which eliminate all these elements because of under the iltizam bitabarra and tabarra, which is this is the contract whereby when the participants are contributing, okay, they are not buying, but they are contributing, they are donating, okay, with the purpose that all of them, okay, ta'awun, okay, helping, okay, guarantee each other, takaful, each other, whereby the fund or the money that been put in the fund then will be used to pay to those who are infected or if there any misfortune happen to them. So like we are putting money in the pool and this is our donation, and if any misfortune happen to any of us in the pool, then the money will be used to help them. Okay, and so this is basically the main contract that eliminate the element of riba, gharar and maisir. But thus, by using the contract of tabarruk and iltizam bit tabarruk, we are sure when we die, are we sure how much we have to pay the contribution? Are we sure when the accident will happen? Still, we are not sure when the accident will happen. We are not sure when we will die, how much we have to pay, how much we will get the compensation. So the element of uncertainty is there, but because of the contract of tabarruk, which is not binding, like the contract of purchase, which is the both parties should get the exchange of what they are purchasing. Under the tabarruk or the donation contract, each parties are not obliged, okay, to exchange what they are contributing. Okay, so that's why there's no element of gharar, meaning there are element of gharar, but gharar is considered a gharar fahish, a gharar yasir. Whereas in the contract of purchase, the uncertainty because of not sure of what the participant will get, when they will get, that is considered as gharar fahish, whereby under the tabarruk is considered as gharar yasir. Okay, so this is among the significant difference between insurance and takaful. After that, I'll share another few contract or sharia contract that are used okay in the overall takaful business in Malaysia. Okay, so in terms of who will be managing the takaful fund, okay, so when we say that the fund, okay, will be put in the pool, but yet still we need a professional fund manager who have the expertise, okay, in managing the fund, okay, to do other aspect of the insurance job. For example, to do the underwriting process, to do the claim process. So it can be done, or it have to be done by a professional, by the expertise. Okay, so under the takaful businesses, this expert is called the takaful operator. Okay, so the takaful operator the takaful operator which is owned by the shareholders, okay, and they will do the business of providing takaful services. Okay, and so in this matter, takaful operator in Malaysian context, they must get a license from Bank Negara in order for them, okay, to operate and to provide the takaful services. Okay, so that's why, for example, takaful operator has to follow the legal and governance framework and other related laws and regulatory framework set by Bank Negara Malaysia in Malaysian context. Okay, so like I mentioned, for the takaful operator, other than they are managing, okay, the pool of fund, okay, on behalf of the customers, on behalf of the participants, okay, they also have the obligation, okay, to ensure that the fund being managed properly, and especially on doing underwriting, and also looking into the claims that come to the takaful operator, because the claim comes will be paid from the takaful fund, from the donation fund, from the money that being donated by the participants. So they have to do all the process to ensure that the claim is a genuine claim, for example. It's not a fictitious claim, it's not a fraud claim. Okay? So it need the expertise in doing that. Okay, so that's why this is the job of the takaful operator, and takaful operator in Malaysian context being regulated by Bank Negara Malaysia. Okay. So when we talk about the legal and the regulatory framework in Malaysian context, for example, previously the takaful being regulated under the Takaful Act 1984. So this is prior the introduction and the effect of Islamic Financial Services Act 2013. Okay. And before this also, for Islamic banking, Malaysia has separate act, which is for banking and also for takaful. And when Islamic Financial Services Act being introduced, effective in June 2013, then all the previous act are not in effect anymore. Okay, so all the takaful company and even for Islamic bank, they have to follow all the requirement under Islamic Financial Services Act 2013. So under the service, under the IFSA 2013, this act give much emphasis on the financial stability and also compliance with Sharia. Okay, so we can see that there are few provision under the act, okay, which put emphasis on the Sharia compliance. Okay, and it also being translated into few requirement, okay, or few impact if takaful operator do not comply with the Sharia. Okay, so Sharia being put as one of most important aspect that all takaful operators have to look into when they are running the businesses in providing takaful services to the customers. So for example, under the section of 18, okay, Bank Negara may revoke the license of the takaful company if their business is contrary to Sharia. Okay. And also under the section 28, okay, whereby it is required that takaful operator at all times, they have to ensure that its aim and operation, business affairs, and activities are in compliance with Sharia. Okay. And then for the purpose of this act also, a compliant with any ruling of Sharia Advisory Council in respect of any particular aim and operation, business, affair, or activity shall be deemed to be compliant with Sharia in respect of that aims and operation, business, affair, or activity. Okay, so they also give a significant requirement to all the takaful company that they also have to comply with the ruling of the Sharia Advisory of Bank Negara. So after they will share what are the influence, okay, of when Sharia Advisory of Bank Negara issue one ruling, and how this ruling then affect in terms of the development of takaful product in Malaysia. So other than this, okay, I would like to share on this. Okay, there are few section which giving the emphasis on the Sharia. Okay, but another one which is if the takaful company, okay, do not comply with the Sharia and also do not comply with the regulatory requirement under this act, then the takaful company may be um, fine, okay, which is not exceeding 8 years, okay, or 25 million ringgit or to both. Okay, so in this act, which give a very specific fine, okay, if any takaful company and even Islamic banking which are not in line with the Sharia, okay, which is before this in the Takaful Act 1984 and even in the Banking Act, there's no specific fine being mentioned in the act. Other than that, there are also additional documents that takaful company have to follow. For example, one of them is Sharia governance. Okay, so prior to ISA 2013, the Sharia governance framework 2010 okay was in the effect, but after ISA 2013, there was new Sharia governance 2019 being introduced, which then we also integrate what has been stipulated in the ISA in the Sharia governance policy. Okay, and this Sharia governance they give much importance to the board and also the Sharia committee and the senior management in terms of ensuring that the company are in line with Sharia, and other than that, that all these key person they have to also equip the knowledge okay, in terms of understanding the Sharia and also for the Sharia committee to understand the aspect of finance, accounting and law. So this is one of the way that Bank Negara is expecting that all key person involved in the industry are having equip knowledge for them to serve the takaful businesses to ensure that the takaful operator are complying with the Sharia requirement expected under the Act. Okay? And other than that, in terms of the function, okay, to ensure that at the internally the Sharia has been taken as one of the important aspect in the businesses. Okay, there should be effective management okay, of Sharia non-compliance risk, which is there are 3 functions have to be performed on ongoing basis. Okay, so which is under the Sharia management, Sharia review, and Sharia audit. So, for example, after the product being launched, okay, so there should be a review okay, to look into either this product has complied with what being endorsed by Bank Negara and also being endorsed by the Sharia committee, for example. And then also for the Sharia audit, for example, okay, they have to look into, for example, this the surplus that being given to the shareholders and also the surplus that being given to the participants. This surplus has fulfilled all the requirement before it being distributed okay, to the both parties, the shareholders and also the participants. And also, for example, in terms of onboarding the participants, okay, either when the participant being accepted, okay, as the customer, okay, so either this participant has been done the proper underwriting process, for example, and also which is there any cases, for example, for the fraud claim, for example, that have been paid. So by this function or during this function being done, then the possibility in finding is there any Sharia non-compliant incident occur in the business of the takaful operator. So in general, for the family takaful product, okay, it actually the product that give protection and long-term savings okay, for the participants. So it's different from general takaful, which give protection or financial assistance for our assets. Okay, so for example, for our home, for our car, so that is under the general takaful businesses. But for family takaful products, it's more on giving protection or financial assistance and long-term savings, okay, for the participants, okay, which then will give benefit to them in terms of financial benefit or financial assistance when misfortune happen. And also it's a way of a long-term personal saving, okay, which is we may, we may argue that we want to save in the bank, okay, but if we say in the bank, so for example, if we have 10,000 ringgit in the bank, okay, so if we die, then our family will be left with this 10,000 ringgit. But if we take takaful, okay, the amount that we may left to them is the amount that we being insured. So for example, 100,000 ringgit. So this is a long-term personal saving, okay, which give us this kind of benefit. And other than that, it also give us investment return from the saving portion, okay, because when we give our contribution, it will be divided into tabarruk, and also certain amount will be put in our own personal savings. Okay. And then in terms of the takaful operator in Malaysia, there are previously there are 11 takaful operator in Malaysia, and then in year 2018 there are 15 takaful operator in Malaysia. So this is not because of the additional company come into the market, but it actually is more on because of the regulatory requirement. Okay, so before 2018, these the takaful company in Malaysia, which is Zurich Takaful, Hong Leong MSIG Takaful, Prudential BSM Takaful, Etika Takaful, Takaful Malaysia, Takaful Ikhlas, AIA Public Takaful, MetLife Takaful, okay, Great Eastern Takaful, HSBC Amanah Takaful, and also Sun Life Malaysia Takaful. Okay, so this company, so for example, Takaful Malaysia, Takaful Ikhlas, Etika Takaful, and also Zurich Takaful, this is a composite license Takaful, meaning they are offering, including Hong Leong MSIG Takaful. So they are providing Takaful product for family and business. So their license is composite license. Okay? They are offering both. Okay? But when the effect of ISA 2013 in 2018 okay, whereby Bank Negara sorry. Whereby under the ISA, which is stated that in 2018, it is the effect of the requirement that the takaful company have to separate their license. Okay, so meaning there's no more composite license takaful company, but the Bank Negara will give a license to do the general business or takaful business. Okay, so Zurich has been given separate license for the family and for the general, okay, and also Etika being given separate license, and also for Takaful Ikhlas being given the separate license to do the general and also the family business, and also for the Hong Leong MSIG Takaful, Bank Negara only allow the family Takaful businesses. Okay. And then for HSBC Amanah, then being taken then by FWD Takaful. So this is 15 Takaful operator that is now operating in Malaysia. So if we look into the development in terms of the family takaful businesses, we can see that most of the takaful businesses or family takaful businesses are contributing by the single contribution, meaning for the single contribution means most of the takaful business for the family are coming from like for example from the takaful for personal financing or takaful for mortgage or home financing, um, not coming from the individual takaful policy. Is which, for example, I take for my son, my daughter, or for my own self. Okay, and in terms of the distribution channel of the family takaful is from the from the banca takaful, okay, from the agent, okay, and also from the um, from the banca, from the agent, and also from the broker, okay, and also from others, which is through direct online, for example. Okay? And if we look here, okay, so the business coming from the agent is not much, okay, because it is reasonable because most of the businesses come from the single contribution, which is possibly coming from the personal financing or coming um, from the home financing, okay, takaful to mitigate, okay, the financing with the bank, okay. And then in terms of the number of takaful agents in Malaysia, so we can see that not much takaful agent working in the industry, okay, and especially if we look at the total of the agents in Malaysia, okay, so which this is the data for family and also for the general takaful, okay. And this is I would say that still we have the stigma or the perception, okay, of takaful agent is not a profession yet being chosen by many Malaysians, okay, because the awareness that the takaful agent or becoming takaful agent is actually a career, which is actually is giving benefit actually, because they will be given the commission and also other benefit, okay, but the awareness, okay, on becoming agent is not yet become one of the choice, okay, among the Malaysians. And in terms of becoming an agent in Malaysia, they have to take an exam, which is the takaful basic exam, and then they also have to go through few trainings, okay, in order for them to become professional when they are delivering, okay, or they are promoting their product, okay, to the customers. And in Malaysia, takaful agent can be Muslim or non-Muslim. So there's no requirement that the takaful operator only have to employ a Muslim agents to become the agent for promoting the products or marketing the products. Okay, and so for for agents, for takaful agents, like I mentioned earlier, it is not required that they have a specific educational certificate, like either he or she should have PM or degree or masters, okay, as long as they pass the takaful basic exam, okay. But it is encouraged, okay, for those who are becoming an agent, that they have to go through few trainings and everything, which is to equip them with the knowledge, and especially in ensuring that they are doing or marketing their product ethically. Okay, because there was in the past, okay, there was an occasion whereby the agent, okay, when they become an agent for one company, and then when they left one company, they go to another company, they tend to bring their previous customer to another company. Or even if they stay in one company, then if the takaful operator offer new product, they may tend to promote to their previous customer, ask them to stop the current product and take a new product. Okay, so that's why for the agent, the takaful operator has to give them a training in terms of understanding the product and also understanding the market conduct. Okay, the ethics as an agent. Okay, and for family takaful products, okay, which is specifically this is among the product that will be taken under the family takaful products. So, for example, for education, for retirement, okay, so for home financing, to mitigate home financing, risk, personal financing, medical and health, and also investment link. Okay, so I'll touch on this on mortgage and personal financing. So I'm not sure either all of you aware or not. Okay, when we are taking financing from the bank, either we buy house from the bank, we buy car. We buy car and we borrow from the bank. We get financing from the bank, and even though we get personal financing from the bank, okay, it will be a tenure that we have to pay back to the bank. For example, after 20 years or after 10 years. Okay, or for car, for example, after 7 years or 9 years. Okay? So within this period, we are not sure either we still alive within these 30 years or 20 years. Okay? So that's why it's very important that when we take personal financing or mortgage financing or car financing, that we have to take takaful to mitigate the risk that we die during this financing period. Why? Because if we die, we cannot pay, or our family cannot pay the financing installment to the bank. So for example, we buy house, we cannot pay to the bank, okay, the installment, and the bank may seize our house because we do not pay our debt. Okay, so to mitigate this risk, then it's very important that we take takaful to protect the risk if we are dying or if total permanent disability occurs to us. Okay, otherwise we will left our children or our family behind, which are struggling to pay the financing, or if they cannot pay the financing, they don't have house to stay. Okay, so this is among the awareness that we have to look into when all of you after graduating, maybe you want to buy house, or maybe you want to take personal financing for whatever reason. Okay, so other than that is takaful product for education. This is especially for their parents, okay, to take takaful for their children. Okay, and then for us, okay, this is also we need this takaful, for example, to mitigate the risk when we retire. So maybe we need some money. Of course, we need some money, and one of our way is by taking takaful. And for the family takaful products that being offered in the Malaysian market, there are also for education and for the retirement product which link with the investment link. Okay, so for this product which has the investment link, it different from the traditional education or the retirement product. Okay, because this investment link will provide the participants, okay, the opportunity to choose the investment portfolio that may give higher return, okay, and there are given few choices, okay. So this also a choice, okay, for those who do not have like separate financial management. For example, they want to invest differently, okay. They have the knowledge where to invest, which shares they want to buy, okay. So other than, I mean, if they do not know how to do this, so one of a way is by taking takaful product which has the investment link, okay, which give them the opportunity to get higher return compared to the traditional product which do not have the investment link. So this is one of the example of product that being offered by one of the takaful company. Okay, so there are many takaful company, but I have taken only this one company. So if you see here, there are products which are for individual person, which are also for the group, and also there are riders, okay. So for individual product, okay, so the person may participate or becoming the participant or the customer by taking this product, and each product they have their unique features, okay. And you see here sometimes, okay, the takaful company may have the name, okay, like they have like sometimes they would have like certain Islamic name in the product. Sometimes, you know, like Salam, Jauhar. Okay, so each product when they design, they have specific aim, specific market target. Okay, so this then will also reflected in their name of the product. So for example, HLM Takaful Fit CI. So this is the product that are targeting for those who are putting emphasis on their healthy lifestyle, for example. Okay, and then for the group product, so this is, for example, which is group mortgage, reducing term takaful. So this product which is being designed for the need of the banking sector. Okay, because for the bank, when they providing personal financing or home financing or car financing, they need the takaful product for their customers in order to mitigate the risk that the customers may not be able to pay the financing if they die or if total permanent disability occur to them. So that's why this is the product that they will ask the customers to take. So this is example of the product. And then for the rider, so the rider in the takaful meaning the customer have a choice, okay, either to take this rider or they do not want to take this rider. Okay, so this is a choice for the customer. And when they take rider, meaning they have to pay additional payment for the rider, and this rider will give additional benefit as being stated for each rider. Okay, but this rider will become, I mean, it comes with the commitment. The customer has to pay, and then if anything happens, according to the conditions of the rider, then the customer will be paid based on this rider that they are taking. Okay, so that I mentioned earlier, for the family takaful, okay, when we want to take takaful, okay, so we have to understand that it's not that when we go, when the takaful agent, for example, okay, promote to us this product, okay, that product. So for example, we are interested to take that product, okay. It does not mean that even though we look like as if the takaful agent is very convincing, persuade us, okay, to take the product. And we also think that product is very good for us. It does not mean that we will be accepted as the customers to take that product. On takaful operator side, they still have to do the underwriting process to assess us. Either we can be accepted or we cannot be accepted. Okay, and they will do the underwriting process whereby, I mean, if you are taking takaful, I mean, you have the experience whereby, for example, they will be given you a form whereby you have to write your name, your age, all your personal details. Okay, how frequent you meet the doctor, does the past 6 months you have met the doctor, do you a smoker, or do you non-smoker? If you smoke, how many cigarettes you take one a day? Okay, so this is the questions that being asked to you, not because of takaful operator want to know you just for the sake of knowing you. So this is the underwriting process. Okay? To know either you is you may I mean, to know either you are a risk person or not a risky person. Okay, so if you are not a risky person, then you may be accepted. Okay, if you are a risky person, your application will be rejected. Okay, and maybe if you are risky but yet tolerable, you may be accepted but with loading. Okay, so for example, the cases that you may be rejected. Okay, so for example, when you fill up the form and you declare that, for example, you have a cancer, stage 4, for example, then you may be rejected because if you being accepted based on the previous experience by takaful operator, they see that those who has been diagnosed with cancer, stage 4, for example, the probability that this person may die is earlier compared to those who are not having any critical illnesses. Okay, so maybe you will argue that if takaful is based on ta'awun, takaful, syariah, syariah compliance, okay, based on Islamic teaching, okay, why takaful operator cannot accept those who has been diagnosed with certain critical illnesses? How the concept of ta'awun being implemented in takaful if they being rejected? Okay, don't we want to help our brothers and sisters? Okay, so in that sense, we have to understand that takaful operator has to ensure that the fund be managed properly. Okay, the tabarruk fund or the takaful fund being managed properly. So one of the aspect of management, meaning that they have to accept the participant which is not risky because of it may also harm the takaful fund. Okay, for example, if takaful operator accept, for example, 1,000 person have been diagnosed with cancer. Okay, in normal takaful product. Okay, so the probability that those who have been diagnosed may put a claim is higher. Okay, and it will become that the takaful fund may pay the claim like within these 2 years, okay, in a huge amount of money whereby the fund is not growing growing enough yet, okay, to pay for others participants who is genuinely pay the same amount of money, and then for example they may die after 2 years or 10 years or 15 years or 20 years, but the fund in the money in the fund may decrease abundantly because of the claim from those who have been diagnosed with the critical illnesses. So this is among the reasons. So that's why the takaful operator has to do a proper underwriting process. But in certain cases, they may accept, but with loading, meaning there are additional amount that they have to pay. Okay, so I'll share with you of this. Okay, which, for example, if they accept, okay, so this is one of the product. So this is example. Okay, so for example, if you are 18 years, okay, so and you want to get the sum covered of 100,000 ringgit, okay, and this is your condition. So for example, you are male, non-smoker, so annually you have to pay 255 ringgit to get sum covered of 100,000 ringgit. Okay, and if you are male but you are a smoker, you have to pay more compared to the non-smoker, because you being accepted with loading. Okay, so similar with female, if you are non-smoker, you have to pay only 190, and if you are female but you are a smoker, you have to pay 240. Okay, and so for example, if your age is 40 and you just want to take a takaful, so this example of one product, but basically in general, this is to show the difference of the contribution that we have to pay according to our condition. Okay, so for example, if you are a male non-smoker, your age is 40, you have to pay 380 ringgit, but if you are a smoker, you have to pay 665, and female 290, and if you are non-smoker and if you are a smoker, you have to pay 425. So this is among one of the results, okay, after the underwriting process being done, okay, which is also to ensure know your condition and also how much you have to pay in terms of your contribution. And in terms of the family, in terms of the takaful model and also the Sharia contract involved. Okay, so like I mentioned earlier, the takaful operated has to be according to the Sharia, and everything must have a proper Sharia contract. Okay, so for example, one of the process is that when you being accepted as the participant, you have to pay contribution. Okay, so this contribution then will be divided into two parts. Okay, which is one will be put into your personal account, but certain amount will be used to pay to the takaful operator as the wakalah fee. Wakalah fee for what? This is the fee to takaful operator for them, okay, to do all the takaful management of the fund for you personally and also for the whole fund in general. Okay, so they will get the fee, so the ujrah. Okay, and for you, when you put when your money being put in your personal investment fund or in your fund, in your personal saving account, okay, then your money then will be put certain amount, okay, in the risk fund. Okay, from that portion in your personal account, certain amount then will be paid or will be put in the risk fund. Okay, this is the tabarruk fund, this is the takaful fund, whereby this takaful fund or this tabarruk fund, this risk fund will be used to pay the takaful cost, claims, and reserve or IBNR or incurred but not reported. So this is among the costs that the participants have to pay. Okay, which is the takaful is one of um, requirement under the takaful businesses. Okay, because takaful cannot operate if there's no takaful company is assisting them in managing the risk. Okay, so when you put your money in the risk fund, so from Sharia point of view, it is considered as iltizam bitabarruk, commitment to donate. Okay, and then when it actually being used to pay this actual cost, it is considered as actual tabarruk. Okay, so that's why in the event there are surplus. Okay, yearly surplus after the financial year of the takaful company, there are surplus in this tabarruk fund. This surplus will be divided, will be paid, okay, to the takaful operator and also pay back to us, to the participants. Okay, so if this surplus being paid to the takaful operator, the Syariah principles that allow the payment, the surplus to the takaful operator is dua lah. Okay, whereby for the participant who have made the iltizam bitabarruk, commitment to donate. Okay, so since they are only committed to donate, okay, so that's why when there are balance, there are surplus after all the required payment has been paid, there are still balance, then this money will be given back to them. Okay, because the actual tabarruk is not occurs yet. So that's justified from Sharia point of view why the surplus is entitled to be given to the participants. Okay, and other than that, in terms of another contract or another Sharia contract, there is used in the takaful businesses, which is court. Okay, so court occurs when it is necessary, and court is required under ISA in the conditions whereby there is deficit in the risk fund. So for example, in the event that after the financial year is closed, there are balance of money, okay, then this is considered as surplus. But let's say if there are deficit in the risk fund, the money is not enough to pay the claim. Okay, so takaful operator has to give court to this risk fund. Okay, this is required under IFSA. So it's not like, even though we are saying that we are using the tabarruk fund, but from professionalism of managing the takaful fund, takaful operator, for example, cannot call the participant and say that, okay, we are deficit of money. Can you please top up your money? Can you top up your tabarruk fund, your tabarruk contribution? Because we have so many claims that we want to pay, but there's no enough money. So it's not being done like that, okay, but the takaful operator has to give the court first, okay, to oblige the claim from the customers. But takaful operator may revise the tabarruk fund for the next year, okay, and so but the contribution is still the same. Okay, so for example, you pay 100 ringgit, but the portion that will be put in your tabarruk, in your personal account, may be lesser because the payment for the tabarruk fund is increasing, for example. Okay, so these among the Sharia contract, and other than that is for the investment of the personal investment, the personal fund of the customers. Okay. So like I mentioned earlier, especially for the product with the investment link, okay, the takaful operator may invest this money in the investment portfolio, in securities or in sukuk or in whatever investment portfolio that is approved by their investment committee and their board. Okay, so the Sharia contract that being used is wakalah bil istismar or mudharabah. So it depends on which contract that the takaful operator want to use in terms of managing the investment part of the customers' money. So this is an example of the wakalah fee, one of the takaful company we have taken from Prudential BSN Takaful. So we can see here for the wakalah fee, okay, in general, most of the takaful company may charge the wakalah fee for certain years only. So this is an example of whereby they charge the wakalah fee for 6 years only. So for the first year, they charge 60%. For the second year, 60%. The third year, 50%. And then 30%, and then 20%, and then 20%. And for the 7th year and above, there's no wakalah fee charged to the customers, meaning all the contribution by the customers will be put in the customer's saving account or the customer investment account, and then part of that then will be put in the tabarruk fund. Okay, and then that I mentioned earlier, the Sharia is very important in the development of the takaful product and also in the operations of family takaful product. Okay. So this is example one of the ruling by Sharia Advisory Council of Bank Negara Malaysia. Okay, so this is regarding the issue of the insurable interest. Okay, so insurable interest meaning when you want to take takaful or in insurance, when you want to take insurance for somebody or even for the asset, you must have the insurable interest. Okay, meaning you have the interest to the person or you have interest to your asset. So specifically, we are talking about the family takaful. So we have insurable interest with the person that we want to insure. Okay, so emotionally and also financially. Okay, so for example, a father has insurable interest with the son, with the daughter. A husband has insurable interest with the wife. Wife has insurable interest with the father. So financially, for example, if the father died, okay, or if the husband died, okay, emotionally, okay, the children, the wife, okay, we have some emotional effect, okay, and even for father, when the son or the daughter die, he may also have personal emotional effect. Okay, maybe it's not a financial effect. Okay, at that time. Okay, so this is the concept of insurable interest. So meaning if you want to take insurance or you want to take takaful, especially takaful, when what we are talking today, we must have insurable interest. Okay, so this is the practice in insurance, and it was being asked either in takaful, we still have to follow this insurable interest requirement. Why? Because we are talking about takaful, we are talking about ta'awun. Why can't, for example, Mr. A who has so much money want to take takaful for B or C or D or E or F. Okay, because he has so much money. Why? It is prohibited when he does not have any relationship with B, C, D, and E. Why takaful still have to oblige this concept? Okay, so when it being asked to the Syariah Advisory Council of Bank Negara, okay, so it being it being stated that, or they have issued a ruling that, okay, in year 2005, the concept of insurable interest, it does not contradict the Sharia, and it may be applied in takaful. Okay, and it is being known as permissible takaful interest in terms of takaful. Okay, being known terminologically. And for family takaful, the permissible takaful interest exists wherever there is a clear relationship between two parties that involve the elements of affection, emotional interdependence, reasonable expectation of loss in terms of material or psychological. In this situation, a person is deemed as having permissible interest on his spouse, children, employees or employer, and any other individual who is dependent on him in any way permissible in Sharia. Okay, because there was cases. Okay, for example, I mean, in insurance, the concept of insurable interest being imposed because to avoid that person using insurance, okay, by taking insurance for the person who does not have any relationship with them, with the hope that if this person dies, he will become the beneficiary. Okay, he will become the beneficiary. So meaning the sum insured will be given to them. So it's a way of making profit, making income by the death of the person that are dying. So that's why to mitigate the unethical act. So that's why in insurance they impose this insurable interest, and it also then being accepted in the takaful. So the beneficiary of the policy of the takaful, it does not have to follow the insurable interest requirement. So for example, the husband can name his wife as the beneficiary, his son as the beneficiary, his daughter as the beneficiary, and even he also can name other person who does not have any insurable interest with him as the beneficiary of his policy, his takaful policy. Okay. So other than that, there is also another Syariah ruling by Syariah Advisory Council of Bank Negara. We also give more opportunity or give more room for the takaful operator to have more, I would say more innovative product, which is the customers are more sophisticated and more demanding in terms of what can be expected from the takaful policy that they are taking. Okay, so one of the ruling which is issued by Syariah Advisory of Bank Negara in 2010, which is allow the takaful benefit payable from the participant risk fund. Okay, which is SAC resolved that the payment of takaful benefit from the participant risk fund, which the tabarruk fund, to meet claim by can be made contingent upon specific events beyond those arising from a defined financial loss or a misfortune. This allows subject to the agreement by the contracting parties. Okay, meaning previously the understanding is that takaful benefit that can be paid from this tabarruk fund is only if misfortune happen. It's only, for example, if accident happen, if total permanent disability happen, if death happen, so this only the misfortune happen, then this tabarruk fund can be used to pay for the claim for these purposes. But now, Sharia Advisory Council of Bank Negara, okay, can be used, okay, to pay for the for the for the purpose of not only for the for the event of misfortune, okay, but it can be used for other purposes as long as it being agreed among the participants. Okay, so that's why we can see, for example, one of the product that being offered in the market, for example, which is the takaful product which has the element of cash payment. Okay, so this is one of the takaful product in the market. So so this is the cash payment. So meaning the participants will be given the cash payment, okay, every 5th year of the certificate. Okay, so previously, okay, when we take takaful, we get the cash or the financial assistance if we die or if any misfortune happen to us. But now with the resolution allow that the takaful operator offer a product whereby even though no accident happen, even though there's no death happen, the money from the tabarruk fund also can be used to pay as a cash payment, okay, to the customers. Okay, and it depend on how the takaful operator design their product, either every 3 years, every 5 years. Okay, it depends. It varies from one takaful to another takaful. But this is what being offered in the market. Okay, and then other than that, in managing the takaful fund, other, like I mentioned earlier, other than we have IFSA and also Bank Negara as the regulator, the Bank Negara also issue few policy document and guideline to regulate how the takaful businesses should be done. Okay, so one of the policy document that oblige for takaful operator to follow is takaful of operational framework. So which stated few guidelines or few requirements that have to be followed by the takaful operator. Okay, so one of them is the investment of the takaful fund. Okay, so for takaful operator, they have to invest the takaful fund in a sound and prudent manner. So meaning they have to invest in the investment that may not put the fund in a risky situation or a risk situation. Okay, which for example they cannot invest in the shares which is so fluctuate, for example. Okay, and then they also must have a guideline, okay, at internally, for example, how many percent can be used to invest in this portfolio, how many percent can be used to in that portfolio, how many percent in that portfolio. So this is in managing the risk, okay, in terms of managing the takaful fund. And secondly, it should in line with the Sharia requirement. So if they want to invest in shares or in sukuk, or if they want to put in the in the bank as one of cash saving, okay, for sometimes for liquidity purposes, okay, they have to be put in the Islamic banking account. Okay, so this is the requirement for the takaful operator to ensure that all their businesses are in line with Sharia. So even though it has been stipulated in ISA, but under takaful operational framework, it has been spelled out more clearly, okay, as a binding for the takaful operator. And then the investment also should give takaful participant reasonable expectation, okay, as specified in the guideline of investment management for takaful operator. There is another guideline for takaful operator that have to follow. They have to follow. Okay, so this is an example of how the takaful operator have to communicate with the customers. Okay, so this is example of one of the takaful company, Etika, whereby they it had to be reported. Okay, where do they invest? How much they invest? For example, so their equities, where they invest in terms of equities or shares. So they invest in construction. So which company do they invest in construction? They invest in consumer product and services. So which company? Okay. They invest in energy. Which company? Okay. It being transparent, reported to the customer so they can check. Okay. And so, for example, they invest in the financial services. So which shares? Okay. Healthcare. Which shares? Okay. Industry and also plantation, property, technology. Okay, so so then for the customers, okay, if we are the customers, when we check, we have a comfort of mind that this is where our money being invested, and if we want to do a double checking, either these shares really Sharia compliant shares. Okay, so we can go to the Securities Commission website, for example, to look into the Sharia compliant list that been issued by Securities Commission. Okay, so it will be transparent and all the customers in a know, okay, where their money being invested. And then other than that, giving services, there is core business of takaful, which is providing financial assistance and managing by investing the money. Certain takaful operator providing additional value added services. It's not compulsory, it's not a requirement for takaful operator, but takaful operators see this as value added, which is to integrate with another Islamic teaching, which is to help the customers. Okay, in order, this also like a marketing point, okay, for the agent when they market their product. So for example, if you take this product, we provide you with an additional services. Okay, so for each takaful operator, they may provide different value added services. So this is one of the examples whereby they provide Hajj by proxy or badal Hajj, okay, which will be taken from the amount of death benefit. Okay, so before the money will be given to the beneficiaries, then the money will be used to pay to do the Haji by proxy or badal Hajj. Okay, and for korban, for example, and also for wakaf. And then now I will move to another more another I would say development of the takaful product in Malaysia. Okay, so previously what have been shared is more on the general product that being offered in the market, which is usually there is also product that being offered in other countries. Okay, the family takaful product, which is designed, okay, for those who are having the ability to commit to pay the takaful contribution. So in Malaysia, Bank Negara has come with the initiative of takaful or micro takaful for those who are lower income citizens. Okay, so this product, okay, which is being launched in year 2017. Okay, And this product are targeting, okay, for lower income group. Why? Because under the guideline of or under the direction of Bank Negara, okay, Bank Negara is expecting that many Malaysians are being insured either by insurance or by takaful. Okay, but looking into the position of Malaysians, okay, Bank Negara aware that for those who are from lower income group, they may not be possible of taking normal takaful that being offered in the market. Okay, so that's why Bank Negara come with the initiative, okay, which is known as perlindungan tenang. Okay, so this product when being offered or launched in year 2017, there's no specific policy document to guide the takaful operator. But this year, Bank Negara has issued in perlindungan tenang, okay, which become a policy document for takaful operator who want to offer this kind of product. And this is actually when Bank Negara come with the initiative. Most of the takaful operator will obey. Okay, will support. Okay, this initiative. Okay, so under this policy requirement, okay, for this product, it is required that takaful operator when they offer perlindungan tenang, it should be the affordable premium or contribution for the targeted group. Okay, so the amount of the commitment should be small. Okay, and it also should be accessible. Okay, meaning the distribution channel should be convenient and accessible to the targeted group. Okay, because because this group, okay, maybe not being seen as a potential customers by the agent to market the product. Okay, so that's why it should be more convenient channel, okay, whereby it is easier for this group to know about the product, and the product should has minimal exclusions. Okay, so in normal or ordinary takaful product, there are exclusion for the product. Okay, so certain, like for in general, for example, one of the exclusion is if we take takaful product. Okay, so for example, one of the exclusion is if you die, okay, because of HIV, for example, it will not be honored and when you take a claim. Okay, so for example, so the product should have the minimal exclusion. Okay, so meaning the takaful operator has to draft what will be the exclusion that they want to put in the product, and the product should have a good value, which is to cater the need of the targeted group. Okay, and then easy to understand. Okay, meaning that the features or the product features, okay, can be understand even though without the explanation by the takaful agent. Okay, and it only need simple disclosure information to the customers. Okay, easy to purchase, easy to make nomination. Okay, and who will become the beneficiaries, and also easy to make a claim. Okay, so this is among the takaful operator which have offered this kind of product, which is Lindungi, which is offered by Prudential BSN Takaful, and then AIA Public Takaful offer AIAI starter plan, and then Agrobank with Takaful Ikhlas, which named Agro Mabro, offer also this product, and then Etika, okay, and then HLM or Hong Leong MSIG Takaful, and also FWD Takaful, and Great Eastern, and another one also under the BSM Prudential Takaful. Okay, so this is what the product is all about. For example, the product being, so this is the participation channel. Okay, so for example, AIA, Prudential, and also FWD, and also Hong Leong MSIG, Great Eastern Takaful, their product can be accessed online. Okay, so meaning no need of the agent. So when the product being offered online, meaning the cost of the paying commission of agent is not will not is not one of the portion that the customer has to pay. So it reduce, okay, the wakalah fee. Okay, and then sum covered. Okay, so this because the sum covered is in line with the contribution. Okay, so the sum covered is either like 10,000 or 30,000. It's according to the plan. Okay, because in terms of the contribution, as low as 39 yearly. Okay, so it's a small amount of the commitment. Okay, so or 50 ringgit. Okay, 39 or 50 ringgit. Okay, or 75 ringgit. Okay, yearly. Okay, not monthly but yearly. So that, I mean, for this targeted group, okay, so at least for them to pay like 39 ringgit yearly. Okay, so it is reasonable for them. Okay, but then it's a matter of spreading the awareness and understanding. Okay, so other than that, I think another development of Takaful in Malaysia, I would discuss on this, which I think this is also one of the good opportunity for Malaysians, whereby in Malaysia we have Perbadanan Tabung Pendidikan Nasional. Okay, so this is one fund introduced by the Malaysian government for the saving for the parents to their children for higher educational institution. Okay, so previously we have Scheme Simpanan Pendidikan Nasional SSPNI, and then PTN introduced Simpan SSPN Plus. Okay, so this saving being given the Takaful protection, okay, which is the integration or the collaboration of PTPTN with the Takaful operator. Okay, so for Scheme Simpanan Pendidikan Nasional, okay, whereby the family, when they want to save for their children, which is at the minimum of 20 ringgit, okay, and then they will get also the Takaful protection. And other than that, they also will get the tax exemption. Okay, so this is one way of the encouragement for the Malaysians to save for their children for higher education. And so this is the detail of the product. Okay, so I come to this product, okay, which is Simpan SSPNI Plus, or now being known as Simpan SSPN Plus. Okay, so the SSPNI, okay, without plus, okay. So this one, okay, the Takaful coverage is very minimum. Okay, the amount is very minimum. Okay, but for SSPN Plus, okay, which is giving more opportunity to integrate the saving with the takaful. And for example, okay, this is the plan that being offered under this SSPN Plus. Okay, so for example, if the customer or if the parents, okay, take this plan, okay, so they take Intan for example, the saving for education is 20 ringgit, but paying for takaful is 10 ringgit. Okay, and they can take either from policy that being offered by Hong Leong MSIG Takaful or Great Eastern Takaful or Takaful Ikhlas Family Berhad. Why only these three takaful company, not other takaful company? Because like I mentioned, this is collaboration between PTPTN and also the takaful company, and there are process being done so that these three takaful company that have been chosen in providing takaful coverage for the depositors or the parents that are taking this product combined with the saving for the higher education for their children. Okay, so this is so if for example they take Zamrud, so they will save 80 ringgit, and then for paying the takaful is sorry, they will pay for the saving is 180, and for the takaful is 20. Okay, so the details of what will be the coverage to most, or basically the coverage will be total permanent disability, the death, okay, which is quite similar with the product that being offered in the market stand alone by the takaful operators. Okay, except that this is a collaborative, okay, between the PTPTN and takaful operators, which give more opportunity for the parents, okay, which what kind of financial management they want to take when it comes to the financial management. So it's not only that they depend on the educational takaful product that being offered by takaful operator, but now they have this choice, okay, whereby they are committing in saving money for their children, and also at the same time they are given the takaful coverage. So I think I would not go on this. Okay, so I think the last one will be another development in the Malaysian takaful product or Malaysian takaful industry in Malaysia, whereby previously there was no product that was offered, okay, for people with disabilities, okay, because of it is not quite sure of people who have these disabilities, either physical disability, hearing disability, visual disability, mental disability, speech disability, learning disability, or miscellaneous disability. There's no previous experience in doing underwriting for this group. So takaful operator do not know what are the risks that this group are bringing with them. Okay, but now there are takaful company which is offering product for this special group. So for example, FWD Takaful is offering product for children with learning disabilities. Okay, and this product for children with learning disabilities being offered, okay, with disability in terms of autism or Tourette syndrome, okay, and it also give coverage to the parents. Okay, and who is eligible to take this product? So this product is eligible for those who has a card, okay, OKU card, which issued by Jabatan Kebajikan Masyarakat, and or a person which have a letter, okay, which issued by medical officer or government hospital or psychiatric private specialist, okay, because this product or this coverage, okay, being designed specifically to look into what are the risks that this group bring with them, so that the benefit, so when they do the underwriting and also they assess the risk, they have in line the risk accordingly. Okay? So this is among the plan that they have for this category of product, which is they have basic plan, premium plan, and also the best plan. Okay, so this the benefit that they will get. Okay, to be the detail of the plan. So I think that's all, Dr. Shahid. I think I exceeding 1 hour and 20 minutes that you have given to me, but you do not notify me, so I keep on continuing my lecture. So sorry for that. So thank you very much. So I hand over this virtual audience to you back, Dr. Shahid. Thank you.
Okay. Alhamdulillah. Thank you, so Professor Dr. Asma Binti Abdul Rahman, for the interesting and very clear lecture with regard to the topic presented. Following that, we are open the floor for Q&A session. Please, if there is any question, you may raise your hand, or you can directly using the medium by writing in the chat box, or you may just directly ask using the microphone. Bismillah. Wait, we're still waiting for the questions.
Is there any question?
Yes. I think Dr. Asma have answered the question before the question is given. All right.
Maybe one question representing or representative student from UNIL, maybe one question, and also one question from UM side.
Okay.
Otherwise, I'm wondering either my explanation is clear or I have mixed up on my explanation, so you cannot catch up my message.
Okay. There is several questions, Dr. Asma. Okay, but we try to take only 1 or 2 questions. Okay, from the okay. First, I think okay. I could read the question. First, what are the main differences between takaful and conventional insurance? Okay, then I try to pick. Oh, there is a practical question. Okay, then okay, you may explain first what is the main differences between takaful and conventional insurance? Maybe in a precise and short answer.
Okay. So I think one of the main differences may be the law, because takaful being regulated by Islamic Financial Services Act 2013, whereby insurance being regulated under Financial Services Act 2013. So for both acts, it has different requirements. Like I've shown just now, like under the ISA, the importance of Sharia being emphasized under the act.
Okay, Dr. Ahmad, thank you for the very precise answer. Hopefully it's covered.
Yeah, because you said so emphasize, otherwise.
Okay, but I think
longer.
in the beginning of the lecture, Dr. Ahmad have explained this very well. Alhamdulillah. Okay, I think for the last question, Number 4 question, from your observation, Dr. Asma, do you think that family takaful business in Malaysia still have a lot more room to grow, or it already reaching its peak?
Wow.
So to the stagnant level, or it can still grow?
Okay, so I mean from from various angles we can see when we talk about the growth. So for example, in terms of the product, I think of course the product will be innovate based on the markets driven. So for example, when there are certain needs, then the takaful product will being offered according to the needs. So in the future, maybe we have different needs. So it's still open for the innovation and growth. And in terms of the penetration of the Malaysian towards takaful, I think it needs it's growing. So I think in the past the penetration is quite low, but now it's increasing, and especially nowadays many parents are more aware on taking takaful for them or even for their family, because many initiative has been done, which is, for example, I think a few years back, or I think currently, we can see that talk on national TV about takaful. So when it being shared on the national media on TV, so many people get understanding and they can see the importance of takaful. So then it can increase the penetration rate among the Malaysians. And other than that, I think now takaful agent becoming more professional. So then they can attract and convince their targeted participants to involve in taking takaful. But in one of the workshop that I have attended, the speaker informed that, for example, in Japan, okay, each person may have 6 life insurance policy. 6. Okay. So Dr. Chahid, how many policy do you have? Okay, so but in Malaysia, for one person to get one policy is still like, I mean, possible, but still, yeah, I mean, still, like I mentioned, the awareness and also the sharing, okay, can increase. But in Japan, in developed countries, like to have 6 policy insurance for them, like this is normal. Okay. And I think also in Malaysia, for non-Muslim also, they also like it is being known that they also have more than one policy. Okay, so hopefully your generation, you can see this one of a way. At least I think if you don't want to take takaful directly from takaful, at least take SSPN for your children. Okay, but it can also give you tax exemption. Okay, if you don't take, then you have to pay higher tax. Okay, this is one way of managing the tax.
Okay, Alhamdulillah, Dr. Asma, thank you for the answering the questions. Alhamdulillah, actually, I'm listening and I'm actually learning from Dr. Asma. That's why I never interfere, Dr. Asma, for the lecture. So, Alhamdulillah, we get a very fruitful discussion today. And I'm sorry to the secretariat for not to stop Dr. Asma, so we can learn and we can take some advantage from the lecture. Alhamdulillah. So I pass over the floor to the MC, Mr. Shami. Okay, thank you. Assalamualaikum warahmatullahi wabarakatuh.
Thank you to Dr. Muhammad Shahid bin Muhammad Noh and Associate Professor Dr. Asma binti Abdul Rahman for the precious knowledge and information just now. So before we start our quiz, we kindly ask the participants to fill in the attendance form in Zoom chat column. So I repeat, before we start our quiz, we kindly ask participants to fill in the attendance form in Zoom chat column. Thank you. So, moving on to our next agenda, I would like to call upon Miss Ernie Fazrina binti Abdul Hamid for a quiz session with all the participants. Please welcome.
Thank you, Muhammad Shahmi. For the quiz session, Google Form platform will be used and participants will be given 3 minutes to answer the quiz. The Google Forms link will be shared in the Zoom chat box. Are you guys ready? If you are, then the quiz will begin now. Time's up. I would like to thank all attendees for participating in the quiz just now. The quiz session has ended. I end my duty as Master of Quiz Session and I shall let the Master of Ceremony to proceed. Assalamualaikum warahmatullahi wabarakatuh.
Thank you, Miss Ernie Fazrina binti Abdul Hamid, for the wonderful and interesting quiz just now. As a saying goes, to every beginning, there is an ending. And now, our first guest lecture has come to its end. Before we disperse, I would like to remind all attendees to fill in the feedback form that has been attached in the chat section. Once again, thank you everyone for gracing our ceremony with your presence. We truly appreciate it. On behalf of the organizing committees, I would like to apologize of any mistakes or shortcomings throughout the event. I end my duty as master of ceremony for today's event with wabillahi taufiq wal hidayah. Wassalamualaikum warahmatullahi wabarakatuh. So for a remembrance, I would like to invite all panel guests, ladies and gentlemen to be ready and turn on your camera for our photography session. We will be having 2 rounds of photography sessions. The first round will be for the panel and guests, and the second one will be for all the participants. So the first round will be for the panel and guests. Okay, maybe we can proceed to the second round. Okay, for the second round, all the participants, please turn on your camera. Thank you.
Okay, I will count 3, 2, 1. So everyone will be ready, right? 3, 3, 2, 1. Okay. Next page. Once again. 3, 2, 1. Okay, one more. 3, 2, 1. Okay, once again. Okay, thank you, everyone.
Okay, thank you. So on behalf of the Department of Sharia and Economics, University Malaya, we once again would like to thank you for making time in your busy schedules to join us here today. We hope you gain some new knowledge and insight from today's lecture, and we look forward to seeing you in the next program. Okay, take care.